Welcome back. Investors piled into semi-stocks this year amid a wave of consolidation across the industry. Josh Lipton is taking a look at what's ahead for the chips in 2021. Josh.
So, Morgan, check out the SMH, the ETF that tracks the chips, surging more than 50% in 2020 and nearly 130%, by the way, from those March lows. The big movers in that ETF, if you pop open the hood, NVIDIA, AMD, and Qualcomm. Intel, your worst performer, the only one actually trading in negative territory. One important theme for chip investors to watch next year and beyond even is big tech companies now becoming big chip designers themselves. So that's a trend we know is accelerating. For example, Apple recently launching new Macs, swapping in its own chip and swapping out Intel chips. Then there's Amazon. It recently announced that new chip for machine learning training as well. There aren't that many companies that can actually afford to do this because it is expensive. If they have the money, it can make financial and strategic sense, lowering costs and improving performance. So how do the traditional chip makers, though, respond to this trend? Well, they are making bold bets themselves. You see NVIDIA's Jensen Huang. He is busy buying ARM. AMD's Lisa Su. She's purchasing Xilinx. Bernstein's Stacy Rasgon, I caught up with him. He says Intel, though, is the most at risk from this trend, in his opinion, because it's the incumbent and its core markets are attacked from all sides. He says Intel stock down nearly 20% this year, and of course, now facing new pressure from Third Point, hedge fund run by Dan Loeb. Morgan, back to you.
Josh Lipton, Happy New Year. Thank you. Jim, you own Qualcomm and NXP, and you previously owned Intel. What is your take on the space right now?
Yeah. Well, I think the fact you just mentioned three such different companies within the space speaks to how diverse the industry is. You can be an NXPI, which is a great play on the automotive sector. I love that. It's also takeover bait. I mean, Qualcomm thought of buying them a few years ago. China nixed that, but the space is consolidating, so I wouldn't mind if NXPI were played up in that. Intel, unfortunately, I think it's damaged right now. It is salvageable. It is salvageable, but it's not a 1 or 2 quarter process. This is a multi-year process. The big thing for Intel is their size. They're so big, it gives them economies of scale that improves their gross margins. But they got to get it together on the production side, on the operations side. And then on Qualcomm, it's in the sweet spot right now. There's no litigation going on. Its customers aren't suing it. Countries aren't suing it. 5G is rolling out. This is a time where it makes a lot of money. Probably in 18 months, somebody lobs a lawsuit at them. But right now, just milk that cow. It's a cash cow.
Yeah, fair point. It is going to be interesting to see what happens with Intel, too, specifically the manufacturing portion of this, given the fact that so much chip making is not done here in the U.S. And we do, at least currently, have an administration that has been pushing hard to see more of that come back stateside, what that'll look like under a Biden administration, and whether we have those conversations, too.